Hey guys, how's it going? Sandy from Renewable Investing. Happy Tuesday. So usually I like making my portfolio video on the first day of the month, usually because it makes it easier to see how my stocks have performed in the past month. But with all the things that have been going on with GameStop and the momentum plays, I wanted to give my opinion on it and kind of give my reasoning for why I'm worried for new investors. And so if you missed that video, I will link it above right now. But in that video, I kind of talked about the reasoning that I wasn't getting involved in these momentum plays is that there wasn't a trade plan or a trade thesis that I could go off of to have a reason for why I was buying into these stocks more than just everyone's buying, there's a lot of momentum on its side. And so that's the reason why I stayed away from it. And so today I'm going to be doing a slightly different version of these portfolio videos that I've done in the past. Normally I just kind of talk about the recent news events that have been affecting the stock, but in today's video I want to go through each of my individual 8 positions that I have and talk about, in around 1 to 2 minutes, talk about why I am still involved with this stock. I'm going to give my reasoning for why I think this is a bullish play going forward, because I think it's a really important exercise to do on a regular basis. Maybe not every month, but maybe every couple of months, especially if a stock has gone down recently, because for a stock that's gone down, it usually brings some doubt into your mind that maybe this is not the best play in the world. And I think it's important to go through your investments and kind of have a reasoning for why you're involved with this stock still, because there's always better options out there. And if you find a stock that maybe you don't feel as strongly about now compared to how you felt months ago, I think it's a good idea to go through and kind of review your positions. So before we get started, I do have to say that I'm not a licensed financial advisor and this is not financial advice. Anything here in this video is just me giving my own opinions on the stock market, and you need to do your own research before making any investment decisions. Also, if you've been enjoying these videos, I really appreciate it with that like and subscribe button, as it would help my channel out a lot. Just a reminder, since I do have 8 individual stocks, it will take a while to go through each of them. So there are timestamps in the description below if I'm talking about a stock that maybe you're not as interested in. And I'm also going to be organizing these based off of the breakdown of which stocks I have the most weighting in my portfolio currently. So my portfolio has changed a lot in the past month. I will throw up what it looks like at the beginning of this year in early January. The main thing is that I had GameStop as a part of my position. This was a stock that I talked about towards the end of December and how I wanted to finally take a position on it. So that made up a decent amount of my portfolio. And as of February, I'll put that up right now, you can say that it's no longer there. And I have a new addition to the portfolio with Nextera Energy, ticker symbol NEE. But as you'll see, my largest position, or I guess it's lack of a position, is still in cash. And so the reason I'm still in cash is my trade thesis, or just kind of my opinion on the overall stock market, is that hopefully, maybe not hopefully because people will lose money from it, but I'm kind of expecting that we will see a market pullback in the next couple weeks or months. I have been saying that for a long time, but eventually something's going to have to give. And I don't know what that catalyst is going to be yet, but I am prepared to take advantage of any discounts that we see overall. And while I have had a decent amount of my portfolio sitting in cash, I was able to outperform the overall stock market in the month of January. So the S&P 500 increased by 2.3%, and my portfolio went up 2.7%, and that's even with the 30+% of my portfolio sitting in cash. So that's showing that I'm picking stocks that are doing much better than the overall market. Even though I've had a couple stocks that have gone down in the past month, I've had some big winners in the past month, and my option plays have been boosting up my portfolio overall. So as I mentioned, I'm going to go through each of my positions and give a quick 1 to 2 minute summary of why I'm still involved in the stock and why I feel bullish on it overall. The first stock I'm going to be talking about is my largest position, and it's also the most complicated one with General Electric stock, ticker symbol GE, which is 19% of my portfolio overall. So I made a video talking about why I was going quote unquote all in on GE and why it was my favorite stock to buy of 2021. So I'm going to give a couple of reasons why. Number one is I think it's a great recovery stock play. For the past, 6 months, I've been talking about recovery plays as being a great option. That's why I have, if I think about it, around 3 of my stocks are still recovery plays. But I think GE is one of the ones that has not bounced back as well as the other ones. The main reason behind that is their largest and most profitable part of their business comes from aviation, which was crushed in 2020. So when that comes back online, they're going to be making a lot more money, and I think this would be a great recovery play going into 2021. Number 2, I think renewable energy is going to be a huge sector moving forward, and I think there's going to be a lot of green energy initiatives put in place by the Biden administration. So I'm assuming that GE, based off of their track record of working with wind farms in Lithuania and the largest wind bank off the coast of the UK, I expect that they'll be involved in that as they are a US-based company. And this is a stock that I've been using my wheel strategy on. For people that don't know the wheel strategy, basically I'm selling a put based off of a company that I really like and I wouldn't mind owning 100 shares. If the stock falls, I end up buying 100 shares. The stock had fallen recently, so I do own more than 100 shares at this point. And after I do that, I've pocketed that premium, and then I end up selling a covered call, meaning that I'm selling a call against the shares that I own. and I'm using that premium to buy more shares of GE because I am very bullish on it. With this wheel strategy, it does limit your upside potential because I'm capping the upside to my gains with selling the covered call. But the way I'm kind of counteracting that, and the reason why I've bought an option for the first time ever, is the past 2 times that I've gone quote unquote all in on a company has been with GameStop and Sonos, ticker symbol SONO. In both of these times, I was 100% right about where the stock was going to go, and it shot up in price significantly after I talked about it. So to make sure that if the stock does increase in price rapidly, and I have capped my gains a little bit with a covered call, I have decided to buy a very long out of the money call. So this is a call that will expire in January of 2022. So there's a long way to go. And I made a video talking about what I'm going to be doing specifically with that option, and I'll link that video above right now. But I have a very strong feeling about GE, and that's why it's the largest part of my portfolio, and I'm using the premiums that I'm bringing in from selling the options to buy more shares. So eventually I'm going to have at least one lot just kind of sitting in my account, but as of right now, I do own the 100 shares plus because I did sell that put and got assigned. The second largest position in my account is Southwest Airlines, ticker symbol LUV. Currently, LUV is down 2.4% in the past month, and it's around 14% of my account. I've had this position for a long time, and it's overall up 45%, which is very solid. When I was talking about GE with recovery plays, Southwest Airlines was the first one that I decided to buy because I thought it was probably the best positioned airline to do well sooner rather than later. So they are a budget airline, which means that I think that they're going to be doing very well when the pandemic ends, and a lot of the cost-sensitive consumers are going to be looking to travel considering they haven't been able to do that for a while. And when you look at budget options, I think Southwest is the best by far. Also, they have great books with very high margin, meaning that they'll be very effective at turning revenue into actual income compared to some of the other airlines, some of the larger airlines like United, American, and Delta, which bring in a lot of revenue, but their margins aren't as good. And then finally, I think since they operate mainly domestic routes, I think they're going to be in much better shape compared to the larger international airlines like Delta, United, and American. They're going to have to worry about the politics of the opening borders before they can run their most profitable routes. So overall, I think Southwest is the best airline overall, and that's why it's been a part of my portfolio for 6+ months at this point. The next largest position is actually the newest position in my account, which is going to be Nextera Energy, ticker symbol NEE. So NEE makes up around 10% of my account, and it's been up 9.2% in the past month. I bought this on my birthday as I wanted to include more green energy stocks into my overall portfolio. This is one of the reasons why I also bought into GE stock. And if you watch that video, I went into depth of why I did that. I'll link that above right now. But similar to GE, I bought it because I think green initiatives will be a very strong force in the sector going forward. And since it is the largest energy company in the US and has taken that title away from companies like Chevron and ExxonMobil, I think it's in a great spot right now. When you look at its track record, it's been incredibly stable. When you talk about growth, it is a dividend aristocrat. And when you look at the chart since 2000, it has had incredible results. So this is an incredibly stable company that will do well with the green initiatives. In addition, it's just a fantastically run company and it's the largest energy company in the US, so I feel very comfortable owning it for a long-term investment. Next up, being 9% of my portfolio, is Planet Fitness stock, ticker symbol PLNT, which is down 4.4% in the past month. When I look at my overall positions, it's probably the one that I feel the least strongly about. There is a pretty good chance by the time I get to the end of this month, this stock may be maybe half the size or completely gone. But the trade thesis and the reason why I bought in the first place was the fact that it was a recovery play and it had a lot of the same positives as something like a Southwest Airlines, considering it is a budget option in their sector. So as I mentioned, this was a recovery play and it has done very well for me, bringing in 35% overall. But when I look up the charts right now, you can see that there is a very solid resistance at the $80 mark. And while it was able to get above that for a little bit, it did not hold for very long. So I definitely should have considered selling my position at that point. And as of right now, I'm not sure how much more upside potential it will have, considering that unlike Southwest Airlines, where they are able to do some business, even though we still have the pandemic going on, my personal gym in Oregon is completely shut down, so they're not making any money right now. And I think this could be a position that's not going to do as well compared to some of the other positions that I own right now. So maybe towards the end of this month, I may consider getting rid of this stock and just locking in the 35% profit that I've made already. Next up, with 8% of my portfolio, is Nike stock, ticker symbol NKE, which is down 1.4% in the past month. Since I am in Oregon, it only feels natural to have Nike stock. When I look around at companies that have extremely high brand loyalty, I think of Nike, I think of Lululemon, and I think of Apple. And so these are stocks that, no matter the economic times, I'm not really worried about them having a major dip because the brand loyalty is so high. This is the best performing long-term hold that I have in my portfolio, being up 67% since I opened its position. This is a stock that I feel very strongly about. I think it's a great blue chip stock that has shown the the complete dominance in their sector of Nike overall. And it's a stock that I feel very comfortable owning for a long-term position. It is a very local company, considering I can get to the headquarters in less than 10 minutes. And that's a reason why I'm very comfortable owning this stock. I think it is one of the best retail stocks overall, even though they're not a fully traditional retailer. They've shown that they can do a lot of their online sales if they need to with the pandemic. But this is a stock that I've owned for almost a full year at this point, and I won't be considering selling it anytime soon. And this will probably be a stock that I own for the entirety of my life. With a very similar kind of thought process, I have Microsoft, ticker symbol MSFT, with 6% of my portfolio, and it's up 7.8% in the past month. This is a stock that really doesn't need to be explained why it's one of my favorite long-term positions out there. When I think about stability, I think about Microsoft. It has 3 revenue sources that bring in 1/3 of their revenue overall, so you have overall stability. You don't have to worry about one part of their business slacking and having it be a huge detriment to the company, because this is a stock and a company that has shown that it is very resilient, where if you have a quarter where one of their parts of their business struggles, it is boosted up by the other parts. And when I put up the charts in 2017, you can see it's been incredibly stable. It's been a part of my portfolio for a long time, and I don't see myself selling it anytime soon. And along similar lines, we have Apple, ticker symbol AAPL. Then you have Apple, which is only 3% of my portfolio, and it's up 1.8% in the past month. When I think about stability, I think about Microsoft and Apple. These are 2 of the largest companies in the US. Apple is a $2 trillion business, and I don't see them struggling anytime soon. The only gripe I've had with them in the past is that iPhone sales were too large of a percentage of their revenue, or if they have one bad year where maybe the product isn't up to the high standards that they have, or if there's some tough economic times, they might see a hit. But over the past couple quarters, they have shown that where they can get fully away from iPhone sales and not have it be, the most important part of their business. Obviously, iPhones, it's still a majority of their revenue, but it's not as bad as it used to be. So Apple is one of these stocks I'm going to be buying and holding. Jim Cramer always talks about Apple is not a stock that you should trade. It's a stock that you should buy and hold forever, and I'm fully on board with that. It is only 3% of my portfolio, so anytime we see a drop, I'll probably buy in, but it's a part of my portfolio, and I don't see that changing anytime soon. And then finally, I have Zynga stock, which makes up less than 1% of my account. This is a stock that the position was started because I had done the wheel strategy on the stock. I had sold a put, I bought a couple shares, I sold a call, and the shares got taken away from me, but I ended up still having those shares. So this is a stock that I should probably buy back into. It's a stock that I feel pretty good about it, but as of right now, it is less than 1% of my account, and I should probably bring it up to like 5 to 10% of my account, considering how much cash I just have sitting on the side. And this is a stock that I can use a wheel strategy on, and I have used that strategy for the past 6 months to a lot of success. So mobile games have an incredibly high margins because of their microtransactions, and I don't have to worry about investing in new technology to focus on the next generation consoles, considering all of their games are put onto mobile, which doesn't change as much year over year. So overall, I think this is a great company. They've shown that they've been very effective at milking revenue from games that are multiple years old, which is always a great sign, considering they don't have to worry about pumping out new games year after year. They're very good at bringing in money from games that are not brand new. So overall, Zynga is a stock that I should probably buy more of. When I look at my overall portfolio, I'm pretty happy with it. I should probably cut down the amount of cash, which I'll probably use to buy into Zynga. And I might sell my Planet Fitness position because I don't feel as comfortable about it as I did a couple months ago. So overall, that's my position. That's kind of my trade plans and my trade theses for all the positions that I own right now. And I think it's a good exercise to go through and kind of do this with all your positions, so you kind of know why you're buying into these stocks instead of just buying it because, a couple months ago it looked good. So thanks for watching this video. I hope you guys have a great Tuesday, and I will see you in the next video.